It is April 29, 2014, current time 10:40 GMT. Jay Meisler here with the Daily Forex Trading Outlook. This is a week that's likely to be divided into two parts, and how it ends the week is probably more important than how it starts the week. First half is, as we're in right now, is focused on the European Eurozone inflation data due tomorrow, where an uptick is seen, and market assumes that will probably discourage, if it happens, it'll discourage the ECB from making a policy move the following week. So if this is a surprise, the surprise will be that inflation comes in weaker than expected, as the market has already discounted a firmer reading. The second half is going to be focused on U.S. data, specifically non-farm payroll, and the employment report on Friday from the U.S. And with a holiday in many centers on Thursday for May Day, that should be supportive for the dollar. As you know, most will not want to be short dollars into that number, given that forecasts are, I've seen 230, 250,000 for non-farm payroll. You even saw one for 300,000. So with a risk of a strong number, the dollar probably gets support once we get through the inflation data tomorrow. As for the markets, start with sterling. It's traded 168, has printed 7 days in a row. When this kind of pattern goes on, the longer it goes on, the more risk of a directional move once it's broken. So you got to watch 168 to see if it becomes support or resistance. If support, market will try to push higher. If it eventually becomes resistance, it'll push lower. But this pattern for 7 days around 168 has got it stuck in the range, even though it made a new high yesterday. Dollar yen, which is the most sensitive to moves in U.S. interest rates and risk on, risk off, is trying to establish above 102.50. If it can do that, then it'll push higher. Market's still looking for 105, 110, but it's been frustrated. There's a BOJ meeting today. Nothing special is expected, but the market will be very have its eye open for any hints of easing down the road. Now, as far as the euro dollar goes, you look at the chart here. This is a daily chart. The range is now compressed to about make it 137.80 to 138.80. With the key levels at 139.05 and 139.67 on the upside, and the other key level 136.70 on the downside. So we have some upward momentum. We have a potential for a minor double top here, but if we bounce just off of like the 138.79 level again today. In the 4 hour, we have a very minor uptrend line here, which I will use now as a guide to momentum. We got a double top here just around 138.80, and same levels 139.05 on top. And we can go on to the 1 hour, and I'll show the same thing. Basically, it's 1 hour's 138.40 to 138.80 is the current range. Now, what I do when we're within big figures, 138 to 139, and it's closed on 138. I think it's like maybe 13 out of 14 days or something like that. And the only exception was a week ago Monday when it closed just below 138. So really, it's almost closed on the 138 handle 3 weeks in a row. You watch the 138.50 level, as that's going to set your tone. Otherwise, we're in for one of those days. It's like a holding pattern. Markets waiting for data tomorrow from the Eurozone on inflation. In the U.S., you have consumer confidence coming out today, and it's supposed to tick up from I think it's a multi-year high from last month. So all that seems to be supportive. Ukraine continues to loom as a cloud, but it's not a market factor, and that's it. So continue looking for a range market in the euro dollar, unless either side of right now 138 or 139 is taken out, with the current range 138.40, 138.80, and the reaction to your dollar inflation data tomorrow is going to be the key for the midweek. Until then, the market's going to be waiting and looking ahead, and that should be supportive for the euro, but it has to hold 138.50 to keep a bid. Now, if you look at the bottom of this chart, you'll see a a link for my article, Avoid Dumb Trades and Dumb Stops. It's an open access article, so just click on the link. You can read the whole article. And you'll see some really key related articles in this as well. So this is an article that I think everybody should read. You could really benefit by it. So all you have to do is click on the link. As I said, it's open access. So just click on it and read. Good luck, good trading, and we'll see you tomorrow.